Hi, Sean. How are you doing today?
I'm very happy to be here this morning with $4,300 gold,
Yeah.
and we're at your GCFF conference. Couldn't be a better way to spend the day.
Great. So maybe you can start off just telling an update about your company, a quick overview. Because last time we talked was already January, early this year. This is October already.
Yeah, a lot has happened.
Yep.
We're fully permitted and now fully financed and under construction on our flagship project in central British Columbia called the Cariboo Gold Project. We raised $200 million in equities in August, and before that, $450 million project financing with our partners from Appian, U.S. again. So that translates into about 920 million Canadian. We recently raised another 75 million. So far this year, we've raised almost $1 billion Canadian to push forward the construction of our fully permitted mine in British Columbia. So we're bringing that online. Construction is started with about 14 kilometers of underground development, another a total of 1,900 meters, so 1.9 kilometers into the side of the mountain. And we're also building our new water treatment plant, and we have procured the bulk of our milling equipment. So it's been a pretty exciting year. We put out the updated feasibility in April 29th of 2025. So that's on the website if anybody is interested in that. And now we're just, we're going through the evolution of construction, and we just raised enough money that we should have 6 to 10 drills turning for the next 24 months as we continue to explore the rest of this very large land package. We've only completed about 7% of the overall exploration right now.
Yeah, so you removed some of the risks that you mentioned in the beginning of the year that you're going to do it. So what are some of the remaining hurdles or obstacles that you need to remove before you go to become a production company?
Well, since we talked in January, I said that we would take risk off. Permit's complete, feasibility update is out, and project financing is complete, putting us in a very rarefied group within the space. We've also added now, with this last week, we raised $75 million for drilling. So we're going to be providing a lot of exploration announcements. We have several discoveries from earlier campaigns that we're going to be off drilling on. The challenge that are left for us is execution, milestoning on our 5,000 ton a day mine build, and setting the table for mines phase 2 and 3, which we think is going to be an upgrade from 5,000 tons a day to 7,500 on to 10 and on to 15,000, which sets the table for us. We started 200,000 ounces a year. We're trying to get as big as we can. Some forward-looking statements on this, but for every 5,000 tons a day that we can increase the resource underground mining, we add about 200,000 ounces a year. So why that's important is if you look at something like West Dome, we have a $3.2 billion market cap today. We're at $1.2 billion. So if we complete the 200,000 ounces a year, our target would be to come in somewhere near their market cap of over $3.2 billion. But if you go to some of the companies where the ounces are 400,000 to 600,000 ounces, they get a much higher multiple on those production ounces. West Dome trades at about $160 million per 100,000 ounces, and $1.6 billion for every 100,000 ounce production.
Yeah.
Or something like Lundin trades at closer to $5 billion for the same 100,000 ounces. So it's important scale that we not just make the 200,000 ounce a year mine, but we continue to build out and get to the bigger project.
I also see when we talk about some of the gold sentiments have changed. I see in the last few months, in May, June time, not only the gold price is starting to continue to go up, but the gold equity seems to have a massive interest starting to join in the last few months. What's your comments on that? Are you surprised by that? Are you seeing that disconnect, finally the gap is closing?
Well, I think we've seen a debasement of the U.S. dollar as a reserve currency. We see more and more people looking to gold for risk management. Gold has always been, the only real money. All fiat currencies in the history of mankind have come to a zero value.
Yeah.
The U.S. dollar is the most successful fiat currency in modern history. But we've seen umpteen currencies collapse around the world, and South America and Africa most recently, but also, if you look at the history of Europe, Germany was the first country to print a $100 trillion note.
Yeah.
It wasn't Zimbabwe, it was actually Germany. So, this devaluation of fiat currency is a real factor, and I think that we're seeing a crossover between two worlds as well. We're seeing people in the crypto space now want physical assets as well. So we're seeing two investors come in, the central banks in gold, and we're seeing the crypto people come into gold as well. And there's quite a bit of value sitting in crypto, over $10 trillion. And if you want to, if you bought the cryptocurrency, you probably don't believe in the U.S. dollar to start with. Yeah. So if you're going to try and hedge out of your crypto, you're probably going to gold. If you believe in U.S. Treasury bills as a reserve currency and you want to get risk off, you don't have anywhere to go but gold. So I think that that's the trade here. The inflation within the U.S. and obviously the budget overruns in the U.S. government fiscal management is kind of driving that narrative. But from where I sit, gold has been undervalued for quite a while. So I'm not surprised to see it at $4,000 gold, but I'm also cognizant of careful what you wish for. Oh, yeah. I'm not looking for fair currency collapse. So I like the $4,000 level. Yeah. I think we need to take a break here, be calm, and the people that didn't get in on that gold trade, they're going back down market and buying companies like mine that still have good leverage to the current gold price. Yes. I mean, we have about a $2 billion NPV at 3,300. At 4,000, we're like $2.7 billion. And we're trading at $1 billion. So, and we have quite a bit of upside. So there's ways to play the gold price. If you missed it on the metal, you can come and look at the gold miners, the gold developers, and the exploration companies. And there's still value to be had from the gold price within that portfolio. I would say that we're in a very small group where we're fully financed and fully permitted, and we're in Canada. And we're under construction. So a lot of risk mitigation already done.
Yes. So let's just conclude this by talking about your share price, because for investors' point of view, so last time we talked at the beginning of the year, we're trading at around $2 to $2.20 for a few months, and now it's more than double, but your market cap obviously has gone up quite a bit too. Yeah. So what should the investors be looking at now? You want to get into ODV, and what kind of milestone are they thinking of? What kind of valuation they should be considering if they consider investing into your company now?
So I would say, we're on the risk curve, we're just below the producers. We still have some risk on, but the delta for us to achieve full value is back to what I talked about in the beginning. We think that this project gets revalued closer to somewhere like an Alamos or a Lundin after we do our work. Sure. And if we're, that trades about $3-4 billion per 100,000 ounces of production. We're targeting 200,000 ounces with an uplift to 400,000 ounces a year. So we've got quite a bit of runway. The number one metric I always look at is the NPV to market cap multiple, and then how much money does the company need to raise. I don't need to raise a lot of money. We've been through that part of it. So we've also taken the dilution that we had to take to achieve project financing. So I think we're in pretty good shape for a big re-rate.
Thank you for your time here with us, Sean, today.
Very good. Good luck with the conference. Good luck to all the investors on what they're doing.
Yes, thank you.